Good morning and welcome to the Blue Line Metals Minute here for Saturday, May 27th. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So usually on Saturdays, kind of my routine here, and it's about 6:30 in the morning here, I'll look at the performance data for what happened with precious metals of last week. So, it's a reality check. It's a scorecard. It's just like looking at, baseball stats here. Where's your team stand? So copper down 1.62%, gold down 1.79, silver down 2.56, platinum down 4.33%, and palladium down 6.75%. So what happened? The dollar index, it went up 1.05%. So that was the dollar index and interest rates, treasury yield, specifically the 2-year treasury yield. That is what is our biggest headwind if you're a bull on the precious metals, if you're a bull specifically on the gold market. So the gold market, you have to look at that 2-year note, and I'll post the chart of the 2-year note because I really want you guys to look at this. So the 2-year note, on March 8th, it hit 4.74%. That was the peak. It went up. And then what happened? You had the banking crisis. So they blamed the Fed for raising rates too far, too fast, keeping them too high. And then you have those balance sheets on these banks, these regional banks, as outflows. People, what they were doing was they were pulling their money out of the bank, right? The cash that's sitting there, and they were putting the money in other asset classes that achieve a higher yield. What happens is that the bank itself needs to write down the government bonds that they own. So they needed to take losses on it because remember, as treasury yields go up, bond prices go down. They sell these bonds at a loss. So what happens is that you start to see this panic liquidation, and on March 24th, the 2-year note went to 3.26%. Well, gold went from when it was at its peak, when the 2-year note was at its peak, 474, gold was at 1830. What happened? They unwound these two trades. So you see gold prices go up to, they went up to 2023. Now, those treasury yields are going back up on Fed expectations that they're going to continue to raise rates. And you're seeing really good economic data in the US. You're seeing softer economic data overseas. It pushes the dollar index up. The dollar index broke out of a wedge. Remember, the dollar and commodities work inversely. So these are a couple of things you really got to keep an eye on. Now, if you look at silver, silver is a little bit different of an animal. It's not gold. Gold and silver are not the same. So people argue with me all day over it, but the reality is that silver works best when you have, yes, a low interest rate environment, yes, a dollar declining, but you also need things like manufacturing and things that utilize silver, where the supply is taken off the table and never put back into the system, right? So you need to see Shanghai stockpiles of copper, those need to decline. That means that they are utilizing more. Remember, China is one of the biggest, they use the most copper and silver out there than any other country, right? And they're building their manufacturing. Half the stuff you have is probably made in China in your house, and a lot of it has that silver and copper and things like that in there. So you have to look at these specific things. So copper with China, you need them to stimulate their economy. They stimulate the economy, copper prices go up, silver prices will go up. You'll see gold prices, they'll start to trail, and that's where the gold-silver ratio comes in. So, this week, we're really going to be looking at the debt ceiling. That's going to be kind of the forward-looking, I think that'll be the event that it causes the volatility in the market. Other than that, you'll probably see the blow-off and the NASDAQ, things like that. The NASDAQ was up 3.67%. And you get the peak in the NASDAQ, you probably get the bottom in a lot of these different things. You get peak NASDAQ, peak treasury yields, bottom in gold, and then if you get the Chinese stimulus and things like that, you're gonna see that market reverse. So if you have any questions, you want to talk about this stuff, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading. Have a great Memorial Day weekend. It's perfect out there on the beach. Gonna go hit 18 holes in about 20 minutes here. So take care, give me a call if you need something. Thanks, bye-bye.